In this short video, I'm going to explain why you should invest in HMOs. Hi, my name is Mark Lloyd. I'm co-founder of Property Master Academy and I've been a property investor since 2005. So why invest in HMOs? Well, you'll often see videos or blog posts telling you to invest in HMO property, but most of them don't actually bother to explain why you should invest in them. So here, I'm going to tell you the truth and nothing but the truth about investing in HMOs and why you should at least consider it. So, first of all, just to be clear, what exactly is an HMO? Well, an HMO stands for a house in multiple occupation. And there are many different types of HMO. They can range from being pretty basic to quite luxurious. They can have anything from a handful of rooms to 20 or more in some cases. But the basic principle is still the same. An HMO is a house where you let the individual bedrooms out separately to different people who may not know each other. As well as having their own bedroom, the tenants are likely to share some communal facilities, such as the kitchen and possibly bathrooms too. Now, before going any further, I should say that, in my opinion, this is a wonderful time to be investing in HMOs. You don't need me to tell you that the cost of living is rising really fast right now. More and more people are finding out that with rent and bills, they cannot afford to rent a house or flat all to themselves. Whereas a room in an HMO is a very affordable alternative. It's much cheaper to rent a room than an entire flat. And also, with an HMO, bills are usually included too, so it's much easier for tenants to budget. There's always been good demand for rooms to rent, but in the present circumstances, I can foresee a huge rise in the demand for HMO accommodation. So now let's look at why you should be seriously considering investing in HMOs. Firstly, HMOs are a cash-rich business. Even just one HMO can generate an impressive cash flow. A cash flow is far in excess of a standard buy-to-let property. Think of it this way. If you have an HMO with 6 rooms let at £130 per week each, then over a year, if you could achieve full occupancy, you would generate over £40,000 in cash. To generate this level of cash flow from a standard buy-to-let, you would need to buy and run 4 separate houses or flats, each let at £850 per month. Now let's assume you build a portfolio of just 5 HMOs like this. You would be generating £200,000 in cash each and every year. 10 HMOs would give you £400,000 in cash every year. Now, of course, not all of this is going to be profit, but in the property business, cash turnover is a very useful thing to have. You can use that cash to invest in more properties and build your business fast. The second reason you should invest in HMOs is that the yields can be excellent. Yield is a simple comparison of rent earned versus the original cost of the property. Now, yield isn't foolproof, but it is a useful rule of thumb. With a standard buy-to-let, 4 or 5% would be considered a reasonable yield. But the yield on an HMO should be at least double that. An exceptional HMO could produce 4 times that. So for example, let's say you buy a house for £400,000, let it out to one tenant at £800 per month. So as you can see here, your yield would be the rental figure times by 12 for the year, divided by the purchase price of £400,000 times by 100 to give you a yield of 5.4%. But let's say you buy a house for £400,000 and now rent it out as an HMO with 6 rooms at £130 per week. So your yield is 6 rooms times by 130, which is £780 per week, or £40,560 per annum. Divide that by the purchase price of 400, times it by 100, gives you a yield of 10.14%. Now that's almost double what a buy-to-let would be. Now appreciate I've not taken into account expenses and so on. These are gross yields, but hopefully you get the idea. Now this might seem too good to be true, but it is true. The third reason for investing in HMOs is that you can effectively create money. Now in some cases an HMO can be valued not on just its bricks and mortar value as a house, but on the basis of its net rental income and the yields as a business. Now this type of commercial investment valuation may be higher. And to give a random example, a house worth £400,000 as a house could be worth £450,000 or £475,000 using a commercial valuation as an HMO. Now I should point out, however, this is not always possible. It depends on the exact nature of the HMO and its location. But this can be very useful to property investors. For example, you could use the extra equity created by obtaining a commercial valuation to remortgage an HMO you've bought at a lower LTV on a better rate. Or you could remortgage it and draw down some of the equity created to fund another property project. Should you want to sell your HMO, then it could well be worth more as a going HMO business than just as a property alone. How neat is that? The fourth reason I need to tell you about is that HMOs can actually minimise the risk of investing in property. I always point out to new investors that all property investments involve a degree of risk. But HMOs help to minimise and spread the risk of investing in property. Here's why. Let's say you have a single family buy-to-let. Voids are something that you should always allow for. But what if you can't let it for several months? Or worse still, what if your tenants won't or are unable to pay the rent and the rent arrears pile up? You would still have to pay the mortgage and other outgoings and wouldn't have a penny coming in. Now this is very, very unlikely with an HMO. Yes, you will have some empty rooms from time to time, that's natural, but HMOs rarely have 100% occupancy. But it is extremely unlikely that your HMO will ever be completely empty. It is very unlikely all your tenants will be unable to pay your rent. So you should always have some cash coming in with an HMO. So you can see why I'm so enthusiastic about HMOs. They can generate more cash, earn higher yields, can be worth more, and can be a less risky way of investing in property too. So what's not to like? Well, one last point, however. Although HMOs have many advantages, I think it's really important to keep our feet on the ground. Investing in HMOs has some drawbacks too. HMOs may cost more to buy, set up and run, and there are more rules and regulations to contend with. An HMO, even a good one, will create more problems to deal with and will take up more of your time than a single buy-to-let property. Now, none of these problems are insurmountable though, and in my opinion, they are a very small price to pay when an HMO can be such a profitable type of property investment. Well, I hope you found this video useful, and if you have, then please hit the like button below so that others just like you will get to see it, and also subscribe to our channel so you get notified of other videos that we post each week. Also, appearing on your screen right now are more videos that will help you with your property adventure. Thank you for listening.